Going on, everybody? Uh, going for our first Money Ain't Scary podcast show. Let me hit mute on my notifications here. We're doing it live, hopefully to be able to involve our community, our broader community, and engage, but questions and answers and all those things. But also to be able to offer the playback and to have it on YouTube and some of our other platforms. So we're really excited about the things that we have going on. And today is really episode one of us kind of jumping in and starting to talk through not just real estate, not just investing, but helping people understand that, our slogan is money ain't scary. It's just a bunch of dead presidents. And it's this idea that we ultimately can take control of our finances, can break out of the rat race. Like, we are not victims to our circumstance. We are not victims to our money. And the reality is that nobody really has a money problem. Like, if you're listening to this, whether you're struggling, whether you're paycheck to paycheck, whether you're racked up in credit card debt, or you think you've got it figured out, nobody has a money problem. We have a knowledge problem and we have a people problem. And that ultimately is what this community is built around, is helping people close both the knowledge gap and understanding, what are the things that I need to do? What are the things that I need to learn? And how do I need to figure out how to do money differently so that I can break out of the cycles that have held us back, that have held us in these proverbial rat races? And how do I learn to do money different? And that's really, when you think about when we launched Dead Presidents Club, we didn't intend fully for the messaging to become holistically real estate investing. It just became really clear to me that people needed an avenue to practically execute these concepts of doing money different. And so when we launched originally, my goal was to say, hey, nobody's got a money problem, they've got a knowledge problem. And so let's create a financial education platform to help people close the knowledge gap. And very quickly it just became so clear to us, like, obviously as a real estate investor, that this is the vehicle that we've chosen, and really the vehicle that I believe is best to not only break out of the rat race, but to really build long-term wealth and to move from this place of living from paycheck to paycheck or living from credit card bill to credit card bill into really beginning to build a platform of sustainable growth and sustainable ability to have something meaningful to pass on for generations. And so today I'm just going to jump in. I got some questions that have come in that we're going to talk through, tell a little bit about our story. And really, if you're here, I would say this: my goal for you is to get you inspired and empowered to close both the knowledge gap and the people gap. I'll say it until I'm blue in the face. You don't have a money problem. You've got a people problem and a knowledge problem. And if you're here right now watching this, you're already doing the work to close the knowledge gap. And if you're joining up, and if you're not, be a part of a community. Get in a room and get around a table with people that are going the places you want to go, and get connected with people who have been the places that you want to be. At the end of the day, it's cheesy, and I know it's like cliche, if you will, to say it, but it is absolutely true that your network is your net worth. And it really, what we mean by that is that the people that you're surrounded by, the people that you run with, the people that you're engaged with, these are the common denominator of these people are going to represent the common denominator of your life, particularly when it comes to your finances. And the truth is that we have to be kind to ourselves and understand that even if you've struggled and you've been in that proverbial rat race, it's not entirely your fault, right? It is your responsibility. The decisions that we make are our responsibility. We have to be accountable for the things that we do, but the process and the way that we got here is not entirely our fault. Nobody taught us to do it any different. Our parents didn't do it different. Our grandparents didn't do it different. The education system has failed us. Nobody is teaching us how to play the game of money according to the rich. Nobody is teaching us how to walk through our financial lives and do it differently. And honestly, so much so that the institutions and their education and their platforms of communication are really stacked against us. They want us to play by a game that they're not even playing by. And so we learn these concepts and we learn these ideas that are really built to benefit the wealthy and benefit the institutional money players, but are not really designed to make us, the average person, knowledgeable enough to build something better for your family and for generations to come. And that's what I say is, as so many people are bound up. I go, it's not your fault if you didn't get the education. But once you start to close the knowledge gap, now it is. Now you're responsible to do something with it. And now you're responsible to begin to understand that the rules of money, according to the rich, are different than the rules that we were taught, if at all. But they were the rules that we need to learn to play by are different. So some of those rules are the things that we want to talk about in this show. Yeah, we're going to talk a lot about real estate. I like to talk about how I bought, how I bought my first deal with $0. I like even more to talk about how I got paid $50,000. Actually, I've got a deal more recently that we'll tell the story of, that we got paid over $150,000 to buy that property. And that is not an exaggeration. We'll show you the story. We literally got paid to buy the real estate. And so I'm a big advocate, a big fan of the real estate game. And it's the common misconception is that you have to have some big nest egg or some big net worth in order to play in the real estate game. And it's just simply not true. And so today I want to talk a little bit about some of the philosophies around money, particularly as we're talking about the real estate game. We want to talk about how to create, how to protect and grow your wealth through what is absolutely the number one, tried and true asset class. I said it this way before, since 1971, when we were removed from the gold standard, our cash has been depreciating ever since. And for me, and the way that we've talked about it in our community, is that it's time for us to get back to the gold standard. It's time for us to get back to the standard of hard assets. If you've been taught your whole life to save your way, save, pinch your pennies, save your dollars, I will tell you this: saving is great, but I have never known anybody who has ever saved their way to financial freedom. I've never known anybody who's actually saved their way to financial freedom. And so we have to learn the rules of money. We have to understand that we've got to make our money work for us. I mean, one of the principles of the wealthy, one of the principles of the rich is that rich people don't work for money. They don't work for dollars. And what that means is they don't trade their time for money. What they've learned is the art and the science of making their money work for them. It sounds simple, but it's a totally different concept that we've ever been taught. I mean, I'll tell you a little bit about my story and kind of how we got here. I come from a bank background. I was a VP, Bank of America, living the proverbial American dream, great six-figure income, had the house, the cars, the stuff, the 401k, the stock option plan. I had all of the stuff. And I'll never forget it. When I woke up one day, I was sitting in the breakfast nook of my house in Redding, California. I was growing in my career. The future was still bright. I loved my job. This is another thing that is so unique to me, is that I actually loved my career. I loved my W-2. I loved my experience in banking. I loved my team. I loved my boss. I loved everything about what I was doing. This was not my journey towards doing something different was not built on a hatred for my 9 to 5. And I know that there's a lot of people that are motivated by that. Like, hey, I just want to get out of my 9 to 5. I just want out. That wasn't my story. And so it's so interesting. I was sitting in the breakfast nook of my house, and I was getting ready to go into my office, and I was sitting there. We had just had our first child, adopted our first daughter. And I was sitting in the breakfast nook, and I had this epiphany, like a light bulb went off in my head, unsolicited. I wasn't thinking about it. And it was just this simple idea that if I didn't go to work today, and maybe for enough days in a row thereafter, all of this money and all of the things that are coming, like all this income and all of these stock options and all this money that was coming into our world would just go away. And furthermore, the deeper I get into this world and the higher I go in the system, the more and more it became clear to me that it didn't matter how high I could go. It didn't matter how much money I could make. I was not building for anything beyond myself. Sure, I had the 401k. Sure, I had a little bit of money. Sure, I had these things. But at the end of the day, I wasn't building towards an avenue that was really destined for generations after me. It was really about consuming what we were able to make. And furthermore, that at the end of the day, no matter how much money I made, at a certain point, I was still trading my time for it. I was still exchanging time for dollars, and it hit me like a ton of bricks. And it's funny because I had read Rich Dad Poor Dad. I had learned this idea that rich people don't work for money, they make money work for them. I had learned some of these concepts, but they had never sunk in the way that they did in this moment where I went, no matter how much money I make, no matter how good my career is, no matter how amazing the team is or how good the company treats me, I am still trading my time for money, and I'm not going to ever be able to break into true freedom. And it struck me so different. And I didn't hate my job. I loved it, but it just started to seed this thing inside of me that started to realize, like, man, I need to start to figure out how to do money different. And what's so interesting is that by most people's standards, I had achieved the greatest outcome possible. I was living the American dream, and yet I still, sitting in my breakfast nook, got hit with this wave of realization that my life was no different than anybody else that was in the proverbial rat race. The only difference is that the numbers were a little bit bigger and the toys were a little bit shinier. But at the end of the day, if I stopped going to work, just like Joe the plumber or just like Danny the executive, our money flow would ultimately stop. And so we started to think about money differently. And that's really what bred and started to build even the journey of Dead Presidents Club, was this journey of teaching people and documenting the process with people of the things that I've done myself. And so we pivoted wholeheartedly. I think within 90 days of this breakfast nook encounter, I had left the bank. I had moved into another kind of transitional job that gave me a little bit more freedom and still helps kind of baseline my income while I was figuring out what this was going to look like. And we literally went all in on business, on investing, and particularly in the real estate space. I mean, I think last year alone, we bought almost or just over $10 million in real estate. And it wasn't because I had some big war chest of cash that I used to do that. I mean, certainly we had some capital that helped give us a kickstart. But what we learned very quickly along the way is the power of utilizing other creative strategies and other solutions to build wealth. And what's so fascinating to me is, as the guy who lived under the banner, who bled the message of Mr. Bank, I started to realize that I was a champion for a message and a narrative as it pertained to money that wasn't even the game that the institutions were playing by. Here's a simple example of that. I mean, the banks, they'll tell you, save your money. Save your money, save your money. Give us your dollars so that they're safe. And in exchange, we'll give you this little, chunk of interest. For a long time, it was like less than, it was like 0.1%, right? Now, because of the economy, obviously we're getting a little bit better, but we're still saying that what the bank is saying is, give us your dollars, save your money so that your money can be safe. The problem is that when you put $1 into the institution, when you put $1 into the bank, they don't even save it. The first thing that happens is they turn around, they digitize it, and they send it out up to 10 times. It's called fractional banking. Do some research and it'll blow your mind. The banks are getting rid of the cash that you put into the bank by reinvesting it, by chopping it up into digital currency and sending it back out through home loans, through mortgages, through different types of investment, bonds, bond strategies, all these different things. They're sending this money out as quick as it comes in seconds. that cash is converted and sent back out. So if the banks aren't saving their money, or our money, it's not even their money, right? If the banks aren't saving their money, then why should I? Like, why in the hell are we doing something that they're not even doing? Why are we playing by a different set of rules? And I started to have these revelations, these understandings, these ideas that would hit me, that I'm like, man, the rules. I was Mr. Bank guy, and I still saw the rules as these old conservative, short-sighted narratives, that as I began to step out and realize what it looks like to build wealth, and frankly, the simplicity of the model of wealth building, I realized, man, the rules are different for the wealthy. And that's when I understood we have to learn to start playing by those rules. And so that's really what Dead Presidents Club, how it came to be, and really what our goal is. And our mechanism of doing that is to help people return to the gold standard. And right now, I believe the modern day gold standard is real estate, hard assets. Guys, the thing that, everybody's freaking out right now in the market, and we can talk about what's coming and what's going, and what's going to happen in housing prices and interest rates. And I'm happy to talk about all of those things. But what's really interesting to me is that, all of the doomsdayers out there are saying the housing market's on a bubble. It's got to crash. It can't go any higher. And we can talk about the economics of why that's just simply not true. I call it logic economics. I'm not interested in what the media has to say. I'm interested in what the data has to say. And the data tells us that we have a shortage of supply and a pent up buyer demand, unlike any other time in residential or real estate history. And the logic economics of supply and demand is that when supply is low and demand is unleashed at a higher clip than we've seen before, which is what will happen when the interest rates come down, then ultimately what we will see is a continued explosion in price. But let's take that out of the equation, and let's just talk about these doomsdayers that say it's a bubble, it can't go up any higher, it's got to crash. Let me say this: I'm less concerned about the crash of real estate than I am about the secret crash, the hidden crash, the crash that's happening every second of every day that nobody's talking about. And that, my friends, is the crash of cash. Here are some facts that you need to understand. The US dollar has lost 98% of its purchasing power since the departure from the gold standard in 1971. Think about this. Since 1971, we have lost 98% of the value of our dollar. A dollar has the purchasing power of 35%, just over 35% of what it could buy just 28 years ago in 1985. In other words, $1 million held from 1985 would be worth $350,000 today. Another way to say it is to keep up with inflation, what's happening economically in inflation, you would need 2.8 times, just under 3 times the amount of money from 28 years ago to today. You would need triple the amount of money just to be at net zero. These are dumbfounding numbers. Inflation in 1985, by the way, was 3.56%. Current year-over-year inflation as of last month was 6%. So not only is our cash crashing, but inflation is increasing. And we have to understand that there's a silent crash happening that nobody is talking about, and it is the crash of cash. So here's what we've got to start to think about is, what are we going to do differently, right? When I put $1, if I'm sitting on $1 in the bank, that money is losing at the current rate of inflation, which, by the way, we're getting inflation down, right? I think we're down somewhere in the 3% range. I think the data actually comes out today, so we'll see what the inflation data tells us. But what that means is that my money today is worth 3% less than it was worth this day last year. Every moment of every day that cash sits in a cash equivalent account, not growing, not invested, not being provided a return on that cash, it is losing money every second of every day. I've heard so many people say cash is king. I'm here to tell you, grandpa and great grandma, that was true for them because their cash was tied to an asset that was tangible. It was called the gold standard. But in 1971, cash became debt, was removed from the standard of being backed by a hard asset, and started the process of becoming trash, not king. Cash is not king, cash is trash. And I don't care what anybody tells you, that the process, as soon as cash comes into my ecosystem, guys, I get rid of it as fast as I can. If I've got cash that's coming into my world, I get rid of it as fast as I can. Why? Because cash is getting eroded by a silent killer called inflation. And everybody wants to rant and rave about a housing market crash, a stock market crash, a bank crash, all of these crashes. But it's so interesting to me that nobody's providing air coverage to the crash that's happening every single day that has cost us 98% of our buying power since 1971. And that is the crash of cash. So what do? We got to get our capital back into places that produce a return that beats inflation. That is how we get back to the gold standard. And for us, hard assets are the way that happens. Hard assets are the way that we do that. And I believe real estate is the greatest vehicle of all time for this particular purpose. And what the reason for that is because real estate has a history of hedging against inflation. While everybody else is out, was through pandemic life, everybody else was screaming and yelling about the price of eggs, the price of milk, and the price of gas. I was happy as a clam. Why? Because when inflation is at an all-time high, my real estate benefits from that inflation. Hard assets benefit from inflation. So when I put my cash, when I rip up my cash and I put it into a hard asset, what I begin to do is develop a discipline and an understanding that cash is now out of something that's being eroded by this silent killer called inflation. And I take inflation and I supercharge it and I use it to grow my net worth. So while you're stressed out about the cost of eggs, I'm singing happy songs all the way to the bank. Why? Because inflation has increased the value of my real estate. This is the clarion call to get back to hard assets, because hard assets beat and benefit inflation. I love inflation. It's my favorite thing in the world. Why? Because my investment strategy is benefited by it. This is the reason why effectively I became a real estate guy, right? It wasn't because my goal was to become this real estate educator. Like I told you, I really just wanted to become a financial educator, like somebody who really focuses on financial literacy and who really helps people bridge the knowledge gap. And it just became so clear to me that the simplest way that we could do that was by helping the average person understand that real estate is not just for the wealthy. Real estate is the mechanism by which we become wealthy. Real estate is the mechanism by which over 90% of millionaires became millionaires. Real estate is the greatest investing strategy and tool, and so many people are missing out on it because they've been sold a lie that they've got to save 25% down or have perfect credit in order to do it. And so part of our goal is to just close the knowledge gap and go, listen, if you're looking to get into the game, if you're looking to break out of the rat race, this is not a get rich quick scheme. Guys, this isn't this isn't about the crypto bubble. This isn't about riding the GameStop wave. Like, you want to play those games, go play them. But as far as I'm concerned, you'd be better odds at the blackjack table. Like, I'm just not interested in finding solutions that are not tried and tested. You guys know, here's a fun fact for you. 65 out of the last 71 years, real estate has gone up or stayed the same. So out of the last 71 years, 65 of those 71 years, real estate has either stayed the same or gone up. That is called the greatest track record of any investment class. And it is, the beauty of it is that what it teaches us is that time is the mechanism, not the strategy. You understand this? I say this all the time, and I could even tell you a little bit about my very first real estate deal that I bought in November of 2007. I was 19 years old. I thought I was the coolest guy who ever did live. I bought a townhome in Mill Creek, Washington. We bought it for $252,000, which was a good deal, or at least I thought it was a good deal at the time. And what I was able to do was, buy this property, and I had a roommate and like all of these different things, and I just thought I was super cool. We closed on it, I think in November ish, 2007, and we all know what happened in 2008, right? Everything went bust, the market exploded, and specifically in the condo and townhome, sub market, we saw like a double or triple hit because all of those units short sold or foreclosed. As a matter of fact, in our development of, I think it was like 150 units, we were the only unit that did not foreclose or short sale during the 2008 crisis. I got my tax assessed bill. I bought in 2007, November. I got my tax assessed value in April, May, whenever it is, 2008 for $89,000. To make matters worse, to add insult to injury, the unit right next to mine that was exactly the same as mine, but was on an exterior wall, just a few months after that, sold at auction for $50,000. So I don't know if you guys understand exactly how comping works, but when I own a property that I bought for $252,000 and the exact same unit that might even be slightly better, being on an exterior wall, sells for $50,000, that now means that my $252,000 purchase is worth $50,000. So like that, overnight, I went from being the smartest guy I ever thought I could ever be to being the dumbest guy who believed that his financial life was absolutely over and ruined. Now, let me say this. I was fortunate. I had a great job. I was working at the bank at the time. I didn't lose my job. As a matter of fact, I think I got a promotion in 2009. Started being grew into leadership, grew into management. But the point is that I just had this kind of conviction that like, hey, I can still make my mortgage payment. Like all the voices around me were like, just let it go, just foreclose, just short sell it, just let it go. Your credit will be back before your money ever will be. And I just, I'm not hating on anybody who did that or chose that route, but it didn't sit with me. And so I decided to keep it, and we kept it for a couple of years, and then we turned it into a rental, and we went out and bought another property. And the moral of the story is that I sold that townhome 10 years later to the month for $2,500 more than I paid for it. Now, guys, I lost lots of money, right? Because we were underwater when we had a renter. It took all of that time. Like, that is not a success story, but what it is a story of is an understanding that what real estate allows us is an asset class that can if you can stand the test, if you can survive the downturns, then you will be able to be whole and you will ultimately win. Here's the point. That townhome I sold 10 years later to the month, made $2,500, which basically meant I lost money, but at the end of the day, I was whole on the sale. That same townhome sold 2, 3, 4 years later for $150,000 more. Had I just held on a little bit longer, I would have been not only out of the red, but back into the profit. And the point of this is that yes, we want a good deal. Yes, we want to get in right, but time in the market is always better than timing the market. Getting in the market and waiting. I don't want people to wait and buy. I want people to buy and wait, because even if you buy a bad deal, how many of you would agree and understand that buying a unit for $252,000 that I could have bought for $50,000 6 months later was a bad deal? But in real estate, the beauty is time covers a multitude of sins. Time heals all wounds. And what that lesson of holding that property and even selling it before I should have, what it taught me was that if I can buy and wait, I will win. If I can stand the test of time, I will win. If my kids are not going to care about what kind of deal I did or did not get. They're not going to care about the market did or did not crash. What they're going to look at in 20, 30, 20, 30 years is a man, a father who bought real estate and waited. They don't care about the journey. I'm going to look like a genius because in 30 years, this property is going to be 2, 3, 4 times what it was worth when I bought it. The mortgage is going to be paid down to almost nothing, and I'm going to look like an absolute genius. They don't care about how I got into it. So if we can get into these asset classes where we can learn that this isn't about getting rich quick. This isn't about turning our capital into doubling and tripling our capital every year. This is about playing the game of money according to the rich, that when I buy, I win. When I hold, I win. That's what it looks like to get back to the gold standard, utilizing hard assets such as real estate. If I buy and I wait, I win. That is the point. I'm going to look like a genius in 20 years, no matter what happens. Because here's that spoiler alert, you guys. The market is going to crash. It's going to happen. And then it's going to rebound again. And then it's going to crash again. And then it'll rebound again. And then it'll probably crash again. And the cycle will go on and on and on, over and over in perpetuity for the rest of time. And ultimately, if we can accept that principle, that truth, and we can buy for the long haul, and we're not trying to be day traders of real estate. Don't get me wrong. I'm a fix and flipper too. I'm a wholesaler too. I like to have shorter cash conversion cycles. I like a need to be able to create income and cash flow to sustain my life and my businesses. So I do the speculative game too. I do the short-term game, but I never enter a transaction that I'm not prepared to hold for the long haul. Why? Because that's where I'll get bit. I don't know what's going to happen next week. I've got ideas. I've got educated and informed speculation. I've got smart guesses, but ultimately I don't have control over what's going to happen in 2 weeks, 2 months, or 2 years. So I'm going to focus on building a strategy that, sure, if I can capitalize on it in the short term, that's icing on the cake. That's a great win, but it is not the only exit strategy that I'm building in my portfolio. The big picture exit strategy is I'm getting any cash that I do have, I'm getting out of, and I'm getting into hard assets. And if I don't have any cash at all, that's okay, because I can leverage strategies and creative solutions to build towards wealth through utilizing other people's money or other creative financing strategies to build my net worth without having to build my capital and cash position. And so this is the topic of discussion when it comes to real estate. And this is what I hope to be able to demystify for you, is this idea that money isn't scary. Money, when we start talking about tens of thousands and hundreds of thousands and millions of dollars, it's the same rules, it's the same principles, it's the same strategies. There's just more zeros and a lot more courage. A few more zeros and a lot more courage. One of the things that one of my mentors has said to me recently is this idea of going bigger sooner, challenging me. And I pass this challenge on to you, the listener, to go bigger sooner. So many people are wanting to play it safe. And when it comes to real estate, I'm telling you this. Yeah, be responsible, analyze the deals, get a coach, get into community, understand, get around people that are doing what you want to be doing and have experience to help you dodge some of the punches that maybe they've taken on your behalf. But go bigger sooner. I've never met anybody, and feel free to send me an email if you're the one, but I've yet to meet somebody who has regretted owning real estate. I've yet to meet anybody. Now, I've met some tired landlords and people that are sick and tired of the game, but that was really more about their ineffective or inefficient management of the real estate than it really was about their financial upside from it. But I've yet to meet somebody who's like, man, I wish I bought less real estate in my life. But I've met tons of people, my family, my friends, people in my network. I meet so many people that will say to me things like, I wish I shoulda, woulda, coulda, wish I would have bought XYZ opportunity. I would have made this money. Wish I would have done this. would have made this money. I mean, my big woulda, shoulda, coulda. I wish I would have kept that townhome that I exited out of, and I called a win because I got I netted out. I wish I would have held on to that thing. I would have made hundreds of thousands more if I would have held on just a couple more years. The house we bought after that townhome, when we turned it into a rental, we bought a short sale in 2009, 10, somewhere in there, 12 or 11 or 12. I can't remember the exact year, but we bought a short sale kind of as things were starting to like figure themselves out. We bought it. We owned it for a year and sold it a year later for $140,000 profit. And I thought I won the lotto. Like I thought, man, I'm crushing it. That property today, I think I just saw that it sold again for like $1.4 million. If I would have waited just a decade longer, I would have made $1 million of profit off of one transaction. So these are the things that I want people to be thinking about as they're thinking about moving towards financial freedom. And yeah, I'm not the get out of your W-2 get out of your W-2 guy tomorrow. If you want to do that and you want to take the leap, let's go. But I'm a huge advocate for just taking the next step. Do your first deal in 2024. Do your first deal, because here's what I'll tell you. And somebody asked in the comments, what does the 2024 real estate market look like? I'm telling you this. One of two things will happen. This should make you chuckle a little bit, but I'll explain. Real estate will go up in 2024. It will either go up a little or a lot. That is the point of what's going to happen in 2024. Real estate will go up in 2024. I'm confident of that. Supply and demand and logic economics tell me that real estate will go up in 2024, but it will either go up a lot or a little. And I will say this, I am absolutely convinced that you will view the people that bought real estate in January, February, March of 2024 like the people who bought real estate in 2018, 17, 18, 19, 20 prior to the pandemic. Why? Because we have an all-time low supply and the most pent-up demand of any real estate market in history. And the definition or the difference between whether or not it goes up a little or a lot all comes down to interest rates. I believe that the Fed and most financial analysts, most of those high-paid guessers, I like to call them, agree that the Fed will lower the interest rate in 2024. We are all confident that rates are going to continue to come down. They've already come down like a full point and a half. And nobody's talking about that, which we can speculate as to why that is. But here's the point. When the market was already squeezed for inventory, rates went through the roof. It didn't increase inventory. It didn't decrease even demand. What it did was it shoved all of those buyers to the sidelines, where they were now saying, hey, I can't buy that $500,000 house anymore. I can only afford a $350,000 house. And there was a psychology gridlock that took place as all of these buyers got pushed to the sidelines. But I will tell you this, as a result, there is more pent-up cash and pent-up demand than ever before. All the people that were flooding the market, that were bidding on houses and in the chaos during the pandemic, and you get 100 offers on a house and you'd be the lucky one to get the offer. Those 99 others that weren't able to secure a deal, where did they go? Did they decide now all of a sudden they don't want to own a home? No, they're sitting on the sidelines, pissed off and dissatisfied with their rental that they're dumping money into every single month, waiting, hoping, and praying for an opportunity to break back into the market. And here's what I'm going to tell you guys. If you're waiting for interest rates to come down, you're going to be really disappointed. Not because I don't think that they're going to come down, but when the rates fall, all of those buyers that were sitting on the sidelines flood the market again, driving prices back up through the roof. And we know this because we've seen this happen in economic cycles. And I am telling you, we have more risk of a market run today than we even did in 2020, 2021. because there is so much more demand. There is so much more cash and capital on the sidelines, and people are waiting and watching. So if you're one of those people that are sitting by, waiting and watching, I'm telling you, go buy your house, go buy the rental, go buy the property. If rates come down, awesome, refinance. You're just going to save more money, but you're getting today's prices and the option to refinance to tomorrow's rates. That's always going to be an option for you. But if you wait until Q3, Q4, when, by the way, we all know that somebody wants to get reelected, and so there's a very good chance that they're going to bring all of those interest rates down around election time so that they can tell a story about how they beat inflation and were able to get the U.S. economy back on track and hopefully secure themselves some more voter interest and some more voter favorability. But if that happens, you're going to be back to bid war central, and you're going to pay $25,000, $50,000, $100,000 more for the same property. I'd rather own a piece of real estate for $500,000 at 7% today than own that same piece of real estate 6 months from now for $600,000 at 5% interest. I can always go get the 5% interest rate. I can't go get the better deal. So when we look at 2024, and it's been my general prediction that things will be fairly normal Q1, Q2. But if we see any uptick in activity and action, what we'll see is in Q3, Q4, rates will come down, buyers will flood the market. And what I'm absolutely convinced of is that 2025 is going to be our biggest year in a long, long time, maybe ever. Some of the experts live in this belief that real estate is going to double in value faster than ever before. And I don't know if I prescribe to that kind of sensational hype, but I do believe that we are going to see some massive growth. And now is going to be the best time to buy real estate. So that's what I look at for the 2024 market. That's what I'm banking on. That's what I'm betting on. And I'm telling you this, if real estate goes up, I'm buying more. If real estate goes down, I'm buying more. If real estate stays the same, I'm buying more. Why? Because I'm not interested in playing for next weekend. I'm interested in playing the long game. And I'm telling you this, that the greatest wealth building strategy is the ability to buy and own the real estate over the long haul. And that's what our community's really been built upon. I saw one of the questions pop up. What is DPC and how does it start? How did it start? Well, Dead Presidents Club, DPC, is our online community. It's our community of people that want to learn how to do money different. And largely we've become a real estate investor kind of forum, or people that are exploring, wanting to learn how to invest in real estate. But that's not the only thing we talk about. We talk about tax strategy. We talk about, principles of money, rules of money according to the rich. We talk about estate planning. We got specialists that come on and talk legal and corporate structures. We have a lot of different voices that we bring in to try to communicate and articulate from a place of empowerment, all under this idea and this banner that you don't have a money problem, you have a knowledge problem. And DPC is designed to close the knowledge gap and to put you into the room, the online proverbial room, with like-minded people who have interest or have done the things that you are wanting to do. Because the truth is, guys, I don't believe that the future of professional development, financial development, personal development is going to be built on life coaches or coaching programs anymore. I don't think the future of growth and development is going to be built on the coach. I believe that it's going to be built on the communities. And that's what we're aiming to build and structure is a community of people that want to learn how to do money different. That community is always greater than the coach. And don't get me wrong, like we have a coaching program, and I pay tens of thousands of dollars a year to receive coaching and to get feedback and to get developed. I believe that there's value in a coach, but the communities that I'm a part of are far more valuable to me than the coach that I talk to once a week, once a month, once a quarter. And that's really what we're hoping to do, is to create a community of people that can value each other and raise each other up into our own collective greatness. And you can join the Facebook group. It's free. We provide free feedback, deal analysis. Our coaches jump in there and answer questions. You can DM some of our coaches. The Facebook group is completely free. And we also do have a mentorship that we provide for real estate investors that are looking to kind of either get started or grow their portfolio. So we've got, I think 50 students right now. I'd say 75% of them are people that are trying to get into the creative real estate game, whether it be through wholesaling or taking down creative deals with no cash, no credit, and no financials. And then we've got a population of people that have been in the game. They've done the fix and flip thing, but they're now looking to build more long-term wealth. And we're helping people structure and build their long-term wealth by helping them be more strategic about building their portfolio of real estate that can help build their generational outlook when it comes to money. So that's really what DPC is. It started as a dream that I've had for years, which was to empower people to do money different, to close the knowledge gap, and to help people break out of the rat race. And I've always wanted to do this, but there was a little bit of a conflict with me being a public voice of financial opinion when I was a VP at a financial institution. And so stepping away from that institution has empowered me to be able to share my opinions and to share my ideas and to provide feedback. As these are all my ideas. I'm not a financial advisor. I'm not giving you financial advice. I'm just telling you my story, my experience, and the way that I see it. And what I hope is that we get lots and lots more stories, more stories than we already have, of people who have said, I'm going to do it different. This is my year. This is where I start to look at my financial outlook differently. I'm not going to dwell on the past. I'm not going to become obsessed with the future. I'm going to focus on what I can do today, because the action that I take today empowers the outcomes that I have tomorrow. The past wants to rob you through shame. The future wants to distract you through ego. But the moment that you're in right now is the moment that you have to take action and go and do the things that will make an impact for generations to come. So that is what the DPC community is all about. That's what this show is going to continue to be about. And feel free to drop comments, questions. We're going to do these live instead of recorded. And the goal is to be able to engage. So I see another question that says, what's the good way to get your first deal? Well, I think it depends upon what your goal is, right? There's a lot of considerations in the real estate space, whether it be your market, whether it be your asset class, right? So some people are really excited about commercial real estate. Some people are really excited about residential and single family real estate. Some people like small and mid-sized multifamily. So I think part of it is understanding and building out a strategy that really feeds your goals. And then from there, we reverse engineer those goals. As a matter of fact, that's what we do in our mentorship, is help people reverse engineer their goals. I believe in this idea of you've got to be able to sustain yourself before you worry about building yourself financially. And so if you've got a W-2 job that sustains your financial life, then you've already got a foundation that you can build portfolio from. But if your goal is to get out of that W-2 job, or you don't have that baseline set minimum of income, what I like to call the BAM line, it's the bare ass minimum. It is the absolute minimum to sustain and to survive. That's my BAM line. If you don't have that covered, or you're looking to get that covered so you can get out of your job, then I wouldn't worry about building my investment portfolio or my rental portfolio. I'd worry about strategies like wholesaling real estate, novating real estate, doing strategies that help me build my capital quickly so that I can cover my BAM, ultimately grow my short-term cash conversion cycles so that my survival needs are met, and then I can start to carve off from those cash and capital raising activities. I can begin to carve deals off to build towards the long term. It's understanding the strategy. So what's a good way to get your first deal? Well, if you're looking to cover your BAM line and you're trying to replace your income or create an income, wholesaling real estate is the best way. It takes zero money, and you don't have to have any capital to do it, and you can raise capital relatively quickly. An average wholesale deal is 10, 15, $20,000, and all a wholesaler does is find a deal and assign it to an end buyer. I love wholesaling as a great way to get into the game. But if you already have that baseline covered and you don't want to create, I mean, wholesaling is a job, right? It's work, it's a grind. And so if you're not looking to, replace your job, then I would encourage you to start looking at your real estate deal strategies and go, what type of real estate do I want? And how do I learn how to go after the best deals, analyze those deals, make offers on those deals, and then ultimately structure them so that they can be financed, whether it be conventionally or creatively. Those are the things that you can learn by plugging into the communities that can help you structure those. But ultimately, I think you've got to define your exit or your end goal so that you can reverse engineer it to your next or first activity. So that's a great question. So we have to find ways to beat inflation, position ourselves to make inflation work for us. Yeah, that's what we talked about, right? And I just believe getting back to the gold standard of real estate is the way to do it. And it's the reason why I've pivoted 100%. I mean, with the exception of a couple of little like offshoot things that I'm invested in, let's call it 98% of my portfolio is in the real estate game. And I get hate from the stocks, bonds, mutual funds, financial advisory world. I get hate for this because it's diversification. Well, guys, there's nothing more diverse about a mutual fund or a stock portfolio than there is about owning a portfolio of real estate. Mutual fund is just a portfolio of a lot of different stocks. My portfolio of real estate is a portfolio of a lot of different types of real estate. I think diversification is a marketing term that Wall Street used to sell us mutual funds. And I'm just like, I'm not anti investing in the stock market. I'm just simply saying I don't see it as the best vehicle, and I don't see it as having the greatest track record, and it doesn't offer us the most benefits. I don't get as many tax benefits. I don't get as many leverage benefits. I don't get to grow my portfolio using other people's money. I don't get to buy stocks using creative finance. Real estate empowers me to do so much more creatively to build my wealth and to build my network than the Wall Street casino could ever offer me. And by the way, I'll just kind of, not that this is the anti-Wall Street talk, but I'll put a bow on this by saying this: I don't invest in things I don't understand. And I'm a guy with a financial industry background, and I'm telling you right now, I don't understand most of what's going on in Wall Street. And if I don't understand it, there's a pretty good chance that most consumer investors don't understand it either, and they're trusting their financial advisors to be the voices or the experts to guiding their portfolio. But most of those advisors are pushers of packages that were provided by the companies that they work for. These guys aren't more. I mean, Warren Buffett, I think, is the one that coined the phrase that Wall Street is the only place where people who come in town cars and Rolls Royces invest their money with people that come in on the subway. It's not anti-people that are on the subway. It's not saying having a Rolls Royce makes you a better person, but Wall Street is the only place where you have less financially literate people with less of a track record or history of generating or managing money themselves, managing the money of the people who actually have the track record of building it. It's just, it's a backward system, and most people are enthralled with the illusion of expertise and not realizing that these advisors are largely built to push the plans, the portfolios, and the funds that have been fed to them by their institutions that benefit the most from selling those plans, those markets, and those funds. And so real estate is an asset class. It's like, for me, it's like it's a dummy asset class. I don't understand cost averaging, my short positions or whatever in the stock market. I don't understand all the strategies there, but you know what I do understand? Doors, windows, if I'm a little advanced, maybe foundations, right? Sinks, You get the point, guys. This is not a complicated asset class, and I want people to invest in things that they can understand or easily bring in specialists to close the gap of understanding. So, if there are no other questions, we'll wrap up today. And I really appreciate the dialogue. I appreciate the people that have dropped questions in the chat. Unfortunately, it doesn't show me who's speaking. It just says Facebook user. So I'll just assume that these are folks coming from our Dead Presidents Club community. But if you're not already in the free Facebook group, go search it right now for Facebook group, Dead Presidents Club. If you want to follow us on social media, you can follow us on Instagram, on TikTok, Just Dead Presidents. Follow me, Miller Time, me on Instagram, and stay connected, guys. Community is the future of professional and financial development. And this is going to be your year where you learn how to do money different. And so I'm excited to be on this journey with you. I hope you're excited, and don't hesitate to reach out. Get into the Facebook group, send us a DM, send me a message, send one of our coaches a message, drop a comment saying, hey, I need help. I'd like to do my first deal, and see how the community will rally around you to help you achieve the goals and the outcomes that you are after. That is what 2024 is going to be all about. That's all I've got for today. Stay connected, stay in touch, and we will see you guys next week on It's Not Scary. It's just a bunch of dead presidents. We'll talk to you guys